Today we're going to have a look at tax refund or tax liability. Now, a tax refund refers to a refund is when you get money back. Re means back, funds are money. So you get money back from the government. And the way that works is that every week, if you're an employee, your employer takes a certain amount of money out of your pay, which is our pay-as-you-go facility. And so by the end of the financial year, they will have taken out a certain amount of money, which the government will already have. Now, also at the end of the financial year, so right at the end of the year, you or your accountant sits down and you work out exactly how much money you actually owe. And the way that we do that is that first of all, you work out your taxable income, like we've seen in previous lessons. So what will happen is that they will work out your total money from everywhere, your gross, and then we're going to subtract your work-related expenses, also subtract donations, which I haven't really been covering. Donations to charitable institutions are also deductible. And that's going to give them your taxable income. You're going to use the tables and work out what you actually should have paid on that amount of money. Now, the other one we looked at last period was the fact that there's a Medicare levy. So they're also going to calculate the Medicare levy, which is a percentage, which currently is 2%, times your taxable income. And so when we get that, you're going to add those two things together, the tax you should have paid plus the Medicare levy, and then it's going to be compared to the amount of money that the government has already got, the amount of money that you paid in your PAYG. So if the amount of money you paid throughout the year in PAYG is bigger than the amount of money that you should have paid from your tax plus Medicare, the government will give you the money back. It'll be a tax refund. On the other hand, if your employee has not taken enough money out, then you'll still owe the government some money, and that is called a tax liability. So we just quickly look here to summarise what I've said. So in here it just says PAYG tax is removed from an employee's pay throughout the year. At the end of the year, the employee's taxable income is used to calculate the tax payable and the Medicare levy. Tax payable is equal, the total payable is your tax payable plus the Medicare levy. That's in here. And then we have, if the PAYG tax paid is more than the total payable, you get a refund. And your tax refund is going to be the PAYG tax that you paid minus the total payable, minus what you should have paid. If the PAYG tax you paid is less than the total payable, a tax liability is incurred. And so your liability is going to be the total amount of money, total payable, being what you should have paid, minus what you've already paid, which is a PAYG tax. Okay, so in class today, I'm going to do this a little bit differently. What I've got is I've got these sheets. I'm going to fill in one of these sheets on the board as an example and get everybody to fill that in as well. So you should be able to follow that as I do it, but just reading through the example here, so you can have a look at this one later if you want. So our example is we've got Blake has earned $64,290 per annum during the year, and so during the year he has paid PAYG tax, so he's paid tax of $13,155. Calculate if Black receives a refund or has more tax to pay and how much it is. So the first thing I'll note, in this example, there's no deductions. They haven't listed any. So he hasn't got any deductions, so there's no first step of working out what his taxable income is. So his gross, because he's got no deductions, is equal to his taxable income in this example. Okay, so here is the tax table we're going to use. So I believe that's the same tax table we've been using. Just note down the bottom that in 3.4, it's been updated, the tax Medicare levy to 2%. So we're going to have a 2% levy. So the first thing you want to do is calculate Blake's Medicare levy. Now it is, as written here, it is the taxable income, which in this case is equal to his gross. So we're going to put in that 64 because he's got no deductions. So his taxable income is equal to gross minus 0. We're going to put 64,290 in this box. Now the Medicare levy is 2%, so 2 over 100. So we put that in there. We put that in our calculator and it comes out to be $1,285.80. The next thing we're going to do is, it doesn't matter which order we do it in this order they do Medicare levy first. The next, we've done it the other way previously. We're now going to calculate Blake's tax payable, how much he should have paid. Now we're looking for that 64,290. Now 64,290 is in row 3. So we're using the row 3 data here. This is a formula we're going to use, and we're going to transfer it down here. So we've got 3,572 plus. Now the amount over 37,000 is that 64,290 minus 37,000 in brackets. That's how much he's earned over it. And then we're multiplying it by this 32.5 cents for each dollar. So we're multiplying it by 32.5 cents per 100 cents. So it's 32.5 over 100. If you're putting this in your calculator, you could also, remember, put it in as 32.5 divided by 100 if you want, or you can put it in as a fraction. When we've done that, we've got the tax payable is $12,441.25. So the total payable is his Medicare levy and his tax payable. Add them together to get our sum here of $13,727.05. Now what we do is we compare the total payable. Total payable, this answer up here, $13,207, with how much he paid. Now to find out how much he paid, we need to come back to this question and we need to go through this question. It says he has paid PAYG tax of $13,155. So we grab that out of the question and we throw it in this box down here. Now that we've got, this box up here, how much he's paid. So now that we've got the two numbers, we just compare them. Now it's given us a box to colour in. If total payable is more than PAYG tax, then Blake owes more tax. And that's what we've got. 13,727 is bigger than that. So he owes money. So we put in the tax payable. So we're putting that one in, and we are subtracting the PAYG tax that he's paid. So they're the two that we're putting in here. And then we simply put in our calculator and work out the answer. Now in my notes, what I've done is I've done another example which I pulled off these sheets. So today we are using the 3-4 sheets. That first one I've done is just this first example. Then there's more on here which are similar. This last one over here has got our couple of different income forms. So this example is a good one to do where you're working out the total income. It's got deductions as well, and this is where we've been looking at before, working out the taxable income before we're able to work out how much tax he pays on the Medicare levy. And the last page, if you get to, is sort of taking off the scaffolding. So again, it's not a bad idea, if you can, to do one of these without the scaffolding. Just refer back here and put this stuff in, this working in that we've just done. Let me go back up here. The working that we've just done. And if you want to see an example, this one here again is the first example on that third sheet. Okay, have a go at it today.